Stocks slid in early Monday trading amid growing concerns about the independence of the Federal Reserve. Over the weekend, Fed Chair Jerome Powell confirmed the Department of Justice launched an investigation into Powell's handling of a building construction project in Washington. It comes as President Trump continues to criticize Powell's handling of interest rates as Fed chair. Sylvan Lane, business editor here at The Hill, joins me to discuss. Hey, Sylvan, so how is Wall Street reacting to the announcement of this investigation, and why is it reacting that way?
So we've seen a surprisingly tepid reaction from Wall Street so far. As you saw, stocks slid this morning, but the market is about even right now as investors are continuing to process just what went on over the weekend. Now, some folks I've talked to on Wall Street are surprised that the stock market reaction hasn't been more intense, and Fed Chair Janet Yellen, who was Powell's predecessor, even said on CNBC today that she was surprised herself that the market hadn't fallen off more.
Fed chair is usually someone who tries to stay out of politics, but over the weekend, Powell put out a video that was pretty direct, accusing the Trump administration of targeting him to influence the Fed's interest rate policy. What did you make of Powell's message?
It was stunning to me, honestly, to see Powell talk in such direct terms about the ways that the Trump administration, he believes, is using this investigation to try to pressure the Fed. Now, Powell has plenty of experience dealing with Trump's pressure. He was the Fed chairman during most of Trump's first term, and he is used to being asked time and time again about what he would do in response to Trump and the Fed, or Trump and the administration putting pressure on the Fed. Before, he was, indirect, talked broadly about Fed independence and his commitment to doing his job. But him explicitly saying in his statement on Sunday that this investigation was a quote unquote pretext for pressuring the Fed on interest rates, that was pretty remarkable to me as somebody who's been following this saga since its very beginning.
Why do investors see Fed independence as so crucial to U.S. financial markets?
So the idea of the Fed's independence on monetary policy is supposed to make sure that the decisions the Fed makes about interest rates and other tools of influencing the money supply aren't driven by short-term political interests and are instead driven by what the Fed sees as the shorter, mid, and longer-term run of the U.S. economy. Now, there are plenty of instances where a politician or a president may only be looking toward the next election in 2 or 4 years when pressuring the Fed to do something about interest rates. The Fed, however, doesn't have that impulse and that luxury. They have to think about what their decisions will do over the next 6 weeks, 6 months, 6 years. Now, the Fed is still subject to plenty of political oversight and buy-in. All members of the Fed Board of Governors have to be appointed by the president and approved by the Senate. The Fed chair routinely appears before Congress to give testimony. And if Congress wanted to, they could change the law regarding the Federal Reserve and make it more subject to political influence if they wanted it to. But the fact of the matter is, the law regarding the Fed has been the same for almost 50 years at this point, and it's widely regarded as something important to have the Fed being able to make those decisions on interest rates without having the interference directly of politicians in the process.
You talked about stocks being up and down today, Monday, but we have seen a lot of headlines, at least, talking about the return of this "Sell America" mantra from investors. We saw it back in 2025, but that eventually fizzled out and the market came roaring back. Any reason to think this is different?
It's a little bit too early to say just how this is going to impact the markets. What I would say is if we don't get much further beyond this initial announcement of an investigation, it's possible that the market just, brushes this off as another Trump threat and moves forward. But if we get deeper into a situation where there are charges actually being filed against Powell and other potentially members of the Fed, then I think you might start to see the market really take this more seriously and break out of the numbness that we have often seen when Trump announces one thing or another that could impact markets. But investors just kind of look through it with the expectation that it may not come to pass.
President Trump has made much to do about his search for a new Fed chair after Powell's term is up in May, but Tom Tillis, Republican senator from North Carolina, is threatening to throw a wrench in that process by holding up nominations of new appointees to the central bank. How big of a deal is that?
It's a huge deal, Drew. Tom Tillis sits on the Senate Banking Committee, which is the first stop for any Fed nominees. And if he holds to this word and decides not to move any Fed nominees, it's highly unlikely that any of them will be able to get out of committee. Now, Senate Republican leadership could try to put those nominees directly on the floor, but we've already seen Senator Lisa Murkowski, another Republican who has locked horns with Trump on occasion, say that she will also hold the line against approving Fed nominees as long as this investigation is in play. That can make it incredibly hard for Trump to not only replace Powell, but put more people on the Fed board that would be more sympathetic to his desire for much lower interest rates.
All right, it will be a story that we continue to follow. For now, we will leave it at that. Sylvan Lane, thanks so much for your time.
My pleasure.